guys ready? All right. He's alive. You guys ready? Let's do it bold. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together trade plans. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but it's always a good idea to stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I will be your guide on this journey we call Forex. So ask questions, get involved, and I will do my best to help. I have 20 years of experience trading Forex. I have another, 10 or 15 years in the world of high-tech entrepreneurialism and venture financing. Cool. And clearly, I used to be a male supermodel. Clearly, so that goes without saying. So I can bring all the experience from finance, investing, and walking the runway and share it with you in hopes that we put together a half-decent trade plan that has a reasonable opportunity of making some money. But I'm here, I preach to teach. Okay? So it's not a signal service, so you'll have to ask questions. Wayne, how do I refine this? Well, how do you look at that? So, great. Now, over the years of me doing this, people have asked me for resources. Okay, all those links are in the description below. Okay, link to my book, a link to my chart templates, a link to free training videos, a link to paid training videos, and access to, community. And of course, a trustworthy broker that has competitive fees, fast execution speed, right? Narrow spreads and huge swaps. But above and beyond all of that, business ethics and trustworthiness. And that's tradersway.com. So please visit tradersway.com, open up a demo account, place some practice trades. Okay? And see if they can earn your loyalty and respect. And if so, open up a real account someday. Tradersway.com. Huh? You like my collared shirt today? Hope so. Got the cufflinks on. Cool. All right, let's take a look at the poll. If you haven't answered the poll, please do so. I need more votes to make it statistically more reliable. We have to have a reasonable sample size. Please answer the survey. Ansari wants gold. Okay, we'll end it here. I got a reasonable sample size. 5, 4, 3, 2, 2, 2, 2, 1, 1, 1. Lift off. Okay, King C says, hey, is it right? Well, we don't know. And that's exactly what this market is showing us, that some people think it's risk on, some people think it's risk off. So make sure you know what you think. Okay, cool. So let us start somewhere. Let's do some fundies before we do the techies. What should we do? Oh, I know what I wanted to talk about. How many people here confirm that maybe 2 weeks ago in, I think the day trading group, and maybe then again repeated in the swing trading group, I spent 20 minutes to a half an hour doing sort of more of a lecture than anything on industrial metals, going over the idea of thinking 9 to 12 months in advance. How many people went through that? Okay. I mean, it was an interesting conversation for sure. So in that conversation, we talked about, let's move over here. We talked about industrial metals. Let's see what this does. Will that pull up anything? And of course, it's a gold price. Okay, so there's gold prices. Okay, wow, a lot of ads. Okay, gold prices went up. What we're trying to look at really is, oh, wow, we want just the last week or so. Of course, that's not going to work. We also talked about iron ore. Better source here. We could probably keep it here. Okay, we talked about iron ore. Look at the spike since then. Can you change the periodicity? Yeah, that's not okay. Anyway, so it went up. And another one we talked about. And is it here? More. The other thing we talked about in industrial metals was nickel. Oh, they don't have nickel. Oh, good, it did pull it up. And there's nickel. We talked about gold, copper, iron ore, and nickel should go up. And that was when we were here already at the top of a big, so we just talked about the reasoning behind it. And nickel went up 250%. Huh? Nickel went up 250% yesterday. There's a 25-year chart. Went up 250% yesterday, and now all the markets are stopped. They have to be cleared. How about that, huh? Holy smokes. Now, did I say nickel was going to go up 250%? No. Did I say iron ore was going to double? No. Did I say gold was going to 5,000? No. What we talked about instead is the reasoning behind an increase in demand starting effectively immediately. Yeah, only 250%. Okay, but again, the conversation had to do with seasonality. And what we did is we started with December and we worked our way back, reverse engineering an entire year. Okay. And anyways, I just thought that was interesting just to point that out, because obviously that doesn't happen very often, if have ever happened before. So that's a 25-year chart. And look at that. One day we went from a high average to unpriceable. Okay. Interesting, huh? So I don't know. Just, it happened. It occurred. Okay. What's up, Maddie? Okay, interesting, huh? So that, anyways, that's what's going on. Nothing's right, I'm torn. Mohammed says, isn't that a big warning for recession? No. Do you know what a big warning is for recession? And by the way, there's so many people talking now. There's so much going on in the world. There's interest rates, there's inflation, there's the Russian invasion of the Ukraine, and talking heads are competing with each other for eyeballs and ears. The problem is most of them are not qualified. Not everyone is non-qualified, but most are not. So I can hear some people talking like this. Okay, they'll say a flat or inverted yield curve means there's a recession coming. No. That's what it means in other circumstances, but it's true. You can look at an inverted yield curve, and the textbook says the stock market will fall, for example. Well, that's not true in this case. Okay? And an idea of recession right now, because dollar and gold are correlated, no. Is it more like unusual and stuff? Well, maybe. But what's the precursor to recession? Well, you're going to have to start with like job loss. You're going to have to start with deflation. You're going to have to see wages falling. We see the opposite of all of that. Okay? Now, if you're saying, well, in 3 years, Wayne, we'll have a recession. Okay, well, that's different than gold and oil being correlated this week, so that means a recession is coming. No. Okay, look at the economic data. Okay, cool. So anyways, yeah, well, negative GDP would do it, right? But usually you get other things happen before negative GDP kicks in, but yeah. Well, okay, so Mohammed says, so are we following fundamental or risk? Well, both. How could you exclude one? Oh, I'm only a fundamental trader, so I'm going to ignore geopolitical risk. No, you can't do that. Is it popping again? I'll try to keep it down here. Okay. So anyways, right now, some things are coming down. Well, let's do the indice. Will the Fed want a higher dollar? Well, the issue is you also have debt. So you might say higher dollar and that kills inflation, but then you have to pay more for your own debt. And here's what I think. Do you guys want my, opinion? I try not to give you opinions. I try to give you conclusions of research. I can give you my opinion of what the Fed is probably going to do. But again, it's opinion. I can't cite a source for this one. Muhammad says Muhammad's going to cash out of liquid assets and go and invest into illiquid assets. You're probably late on that one. So you probably are better off with some liquidity or to create a different portfolio. Excuse me. All right, Matt wants my opinion. Okay, I'll go with that, Matt. The Fed moves slow in interest rates, 25 basis points at a time. Okay, maybe to 1.5%. But what they'll do, so that has been slowed down. People were pricing in 7 rate hikes and maybe 50 basis points or more to start with and all this kind of stuff. That's downplayed to slow and steady. Okay. The second part is I think they're going to not do balance sheet reduction for quite some time until after the Russian crisis is over, the Ukrainian crisis and the Russian invasion. Okay. So that's my, right? So delay that because that's a risk. They don't know, so why do it now? Richard says, what do you think about the pop in the euro? Okay, the pop in the euro during the London session was because the Eurozone is talking about a rescue bond package. Okay, they're going to sell bonds and raise a bunch of money and buy a bunch of energy with the money. Which means they would cut Russia off. They would stop buying Russian energy completely, shut down all the Russian pipelines going west, and find alternative means with cheap money raised from a bond issuance. Okay, so that's interesting, right? Basically a rescue package. So that's interesting. Matt says, do you see more forced QE coming? What does QE do, Matt? Okay. That's demand side economics. Okay. Would quantitative easing have any impact on the supply on European economic? I don't know. Would it help at all? No. It's not a demand issue. Okay, so things like monetary policy, and quantitative easing is part of monetary policy, Matt. Okay, that only impacts demand side, and the issue right now is supply side. So that would have zero results. Dr. Rage says they buy from Britain. Well, the UK and Norway are the closest. They'll probably secure some nat gas from Bahrain, for example, has wonderful nat gas. But it takes a while to get there, so that's a little more expensive. And there's also talk about, Iran and Venezuela and all that kind of stuff. So we'll see. Unfortunately, the rhetoric I hear is the Western world cares about the Ukraine because of democracy. Okay? But then, to help out the Ukraine, they're going to buy oil from Iran, Venezuela. Venezuela. Okay, we're going to buy them from them and stabilize their economies, which are not democratic. You're like, well, Venezuela's democratic. They vote their, well, why is their government still in if nobody wants it? Okay, so anyways. Okay. And does the average person on the street get to vote for the Ayatollah? I don't know how that works. But anyways, they're not really friendly to democracy, let's say. And so it's kind of weird, right? And you're like, well, so to buy whatever. So it seems a little strange. Egypt, yeah, but it's not big enough. Egypt has bigger problems because Egypt imports a lot of wheat and other grains. Much of it comes from the United States for free, but still, Egypt has a lot of mouths to feed. So it's got a huge population. And anyway, so it imports a lot of wheat, and wheat prices are up. And that means to feed those mouths, it just costs more, a lot more, like double. So, as everybody knows, when you're a waitress and you're working day and night and weekends and holidays to earn money, but your rent doubles, just life gets, because you can't work more. You're just stuck, right? So anyways, sort of Egypt is like that, right? Well, Matt says, Canada increase in oil production. First of all, I'm not sure if they're not doing that. But second, it's just not really quick. So like when the media reports, Saudi Arabia is going to increase oil and they just turn this tap, beep, 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 oh, here's an extra 1 million barrels. I think that's an oversimplification of what actually needs to happen. Okay. Saudi Arabia reports that they have 20% spare capacity. I bet you it's 3% is probably my guess in reality. Yeah, Maida, I just thought you'd love the image of Joe Biden going to Saudi Arabia to beg for oil. It just shocks me to like, what? The President of the United States is going to beg for oil? Like, oh my God. I guess he shouldn't have screwed up the conversation 3 or 4 weeks ago before the war started. You remember I said he'd called the wrong guy in Saudi Arabia to develop a relationship with. So by the time we got to that OPEC Plus meeting last week, we've lost a lot of friends in the Middle East. Just they didn't want to help. So interesting times anyways. All right, so let's go back to technical analysis, right? Right, Lucas says, yeah, nobody's shutting wells down, right, Lucas? Okay, now everyone's talking about like, okay, like Milos is like, okay, they export 7 million, Russia exports $7 million a day, very hard to substitute. Look, think about the reasoning. The world doesn't hate Russia. There are some very nice Russians, good, honest, regular folk. What the world wants is to get rid of Putin now. Okay, back the F off. Okay, and we'll normalize the economy again. Now, I think the Western world is somewhat to blame too. I'm pretty sure we forced Putin to move based on NATO expansion. So I don't think the West is like free and clear on this as far as responsibility. I think they were going to put NATO there, and that is very equivalent. You might disagree with me, and well, I don't care. It's okay. But when the Soviet Union put missiles in Cuba, hey, they were right. The United States had to act. That was a major threat right on our doorstep. So we had to act, and we opened up the missile silos. We brought out the Navy. We were ready to go full-on global war, World War III. Okay? So I think putting NATO, aka American fighter planes and tanks, in the Ukraine is something that he had to respond to. So I don't know. So I think we probably, now I can't prove any of that. That's just, again, my bullshit opinion. But nonetheless, I think we do have some responsibility and some missed opportunities on diplomacy and probably about 20 years of foreign relations screw-ups that have just come to a head here. So I don't know. So the world, you know, if Russia's likely to default, they're likely to have 1,000% inflation. GDP is going to drop by 50, 60%. And something usually happens in that situation, and I don't think anything ever good. So that could collapse into like a Russian civil war, for example. Or at least a coup, or somehow a replacement of power. But that doesn't usually happen quickly. I don't think Putin goes gently into the good night. Hey, but U.S. don't put missiles in the Ukraine. Well, wait. Yeah, it's similar. You build a NATO military base, and you got a corridor into Russia. Or you're blocking, right, a corridor out of Russia if Russia wanted to expand. You know, ask anyone that lives in Georgia. Okay? It's just a very strategic land that has been fought over for thousands of years. Okay? It's an important strategic, right? And the Russians have ties there, all that kind of stuff. Like, it's close to home is all I'm saying. Okay? Yeah, but what I'm saying is Poland is close enough. Okay? And I'm sure guys like Putin didn't like Poland going that way, but nonetheless, they were powerless at the time. So whatever. Okay, I don't want to talk about this anymore. It's just geopolitical risk. 50% of you guys are worried about it, and the other 50% are not worried about it. And therefore, that is probably a reasonable reflection of the overall market right now. So make sure you know which one you want. If you're in a risk-off mode, okay, you're thinking up for these two. Okay, that's risk off. Okay, so that's pretty reasonable. Okay. I think the biggest winner here is China. I think a possible outcome is, you get basically communist Russia, communist China, and, they have about 16 time zones between the two of them. And China sucks up all the natural resources of Russia. All the grains, all the energy, all the minerals, everything. The pipelines are going to turn around and go east and not west. Okay? And we have two very large armies that are synergistic. Okay, I'm getting YouTubers all of a sudden. So I'll just go on with it. Okay, let's take a look at pound around the board. Okay, I want to start with this. This is something that I did yesterday. I just want to continue marking some of these spots. Okay, print a bottom, print a top. Probably have a roll reversal going right now. Okay, cool. Take a look at pound yen. Okay, I already have it trapped. I'm going to retrap it down here. Oops, come on now. Yeah, the mic is cutting in and out. It looks like YouTube is having trouble with the stream. So it's not the mic, I don't think. Okay. Taking a look at euro pound. Okay, I think you need to mark this. Okay, pay attention to that price level. I'm going to pound Swissy. Go out daily, and you'll see we have a bottom, so I'm going to mark this. Okay, just want to show you. That's what I'm trying to capture. Okay, drop into an hourly. And maybe pound Swissy has some up. Remember, Switzerland might intervene and make the Swiss franc weak. So that might be a play because we're on the bottom here. That's an M3. Richard says, what's up with pound? Why is it so weak? Well, it's not positively impacted by the Russian situation. Okay. But I'm keeping my eye on things for that to turn around. And then pound Aussie. Okay. Holding at support. Okay. Also now printing maybe a little sort of, I'm going to mark that little zone there. Let me go in a little closer. Okay. And it's interesting because on the higher time frames, if you're a bear, you're thinking it needs to roll over now. So that sort of begs the question, what if it don't? Okay. So that would be technically interesting on the shorter run. Yes, Lucas, it's YouTube. It's not my microphone. Okay. Mohammed, we cover that on a daily basis. So maybe join the group, man. Okay, let's take a look at some dollar pairs now, specifically dollar. Okay, I marked that up on the other one, but let's do it here. Okay, mark it up. Okay, it's trapped falling right now. Okay, so it's trapped on it. That's not bullish, for example. And you need to mark the upper end of this too. Okay. Adam, I don't know. That's up to their board. I mean, is it really punishing Russians if they can't buy chicken nuggets? Some would think that would be mercy. What's up, Burned? Okay. So stable, stable, stable. We're back into this zone. We'll have to pay attention. Aussie. Stable, 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 stable. By the way, I decided not to trade last night, instead get some sleep. And I woke up, I was so happy because in most cases, the markets hadn't really moved much at all. I was worried I was going to wake up and I missed a 200 pip drop. So anyways, we're just back on the lines I drew yesterday, which is kind of interesting. You might have to adjust this somewhat. Okay. But nonetheless, interesting. Okay. That doesn't say up yet. Okay. Let's talk about this on a smaller time frame. Okay, is that up yet? Well, let's mark this. Let's do it actually with the chart tools. Okay. I'm going to mark that. And which one? This one, or divide it? Maybe just divide it. You can look at it maybe. See, the issue is all of these, so maybe I'll just mark it for emphasis. Okay, like that's a pretty reasonable bottom. Okay. All right. So trading is easy once you get down to the technical analysis. Okay. What do I mean by easy? Well, if you're a bear, you sell up high. That's it. So you would have done that an hour ago and you're profitable. Doesn't mean you're going to have a good winner, but you know what to do. Again, once you've made your decision strategically or fundamentally, it's not that complicated. Sell at resistance. Do bears sell double tops? Yeah. Do they sell higher highs? No. Is that a higher high? No. Is that a double top? Yes. Sell it. Well, but what if it doesn't fall? Then you're not a bear. You don't know what you're doing. You haven't made a decision. Okay. Cool. So what would a bull buy? Bulls will buy down here. So I'll make this a buy zone because there's more than one for different time frame traders. This is only one place to sell, and there's a few choices to buy depending on levels of aggression and the time frame you're looking at. Okay. That's it. That's all we have right now. No. Okay. An upward move like this and then down to the mean is now a buy. Okay. So you're either a buyer in this zone or you're a buyer in that zone. That's it. That's it. Done. There is nothing else. What else are you doing? Oh, well, I'm measuring the angle between this and trying to figure out that. Who cares, dude? Even though I was drawing that for fun, I might as well change it just in case I ever need to use it. We'll do lavender. It's so pretty. Okay? I don't care about stuff like that. So you either have a bullish plan or a bearish plan, or you're neither. So for example, let's do a basic plan. I often use real bodies over wicks. So even though I drew all these things based on wicks, you know, I actually like sort of the real body a little more. I mean, it's all subjective, right? But whatever. So I would filter through all of this with my brain. Okay? Too many lines, too many lines. Everyone's crying about too many lines. So if I was a bull, I'd basically break it down to, I'd get rid of this, and I'm really getting rid of this because I'm going to play this and this basically the same as a bottom, so it'd be ready. So that would be my two plans for the day if I were me. Peter, like harmonics, right? Yeah, bat patterns or whatever they call it. I don't care. I'm just saying, like, you know, what happens when you're not sure what you're doing, then it seems best to complicate things. Because maybe you're not getting what's happening because you're not being complicated enough, right? So you add all these different things. I find, you know, and again, from my venture capital days, simplicity works. Simplicity doesn't break. Simplicity is cheaper to manufacture, so your relative value is higher. You don't need a nuclear-powered rat trap. Yes, it will run forever, but it'll also cost you $2 million, and I don't think you have a $2 million rat problem. Okay? One of the patents I bought was actually kind of a really interesting thing. It was a very basic rat trap, essentially inside of a paper bag. And it had a certain mechanism, so it was easy to set up. And the rat would go in, snap, be killed, and the homeowner just needs to pick up the bag and throw it away with the animal inside. You don't see the animal, you don't touch anything. It was easy to set up, but it was easy to dispose of. You know, simple. And you're like, dude, that's so simple. It's a snapping rat trap inside of a paper bag. Yeah, well, it had a patent. So we acquired the patent. Super simple, yeah. But it always worked. It never failed. And it was cheap. You didn't need batteries. Right? Yeah, and it served a real purpose. Many homeowners, and we surveyed a bunch of people, so don't get mad at me for sexism, but according to the survey, Women don't like picking up dead rats. Now you might say men don't either. Yeah, well, who throws it? Who gets the rat trap with the dead rat and throws it in, right? Okay, so no matter who does it, you don't like it. But it was particularly women don't like picking up rat traps with dead rats in them. So this idea that it's just a little paper bag, all that, is great, right? So there's just a simple idea. So we bought the intellectual property rights to that. Okay. Very often, though, I mean, that's a low value add type product, but very often, you know, we looked at patents, people would bring patents to us that were overly complicated. And the value that I added and the team added was that we took, you know, sort of the starting idea and radically changed it, but not changed the value of the intellectual property. So we were able to simplify it while still capturing the IP and creating, you know, intrinsic value or unlocking value inside of the patent by reducing the complexity. So anyways, yeah, removing Gartley patterns, harmonics, whatever you want to call it. Yeah, I'm not a big fan. Okay, so all of it is like, here's what I'm trying to get to. I don't really care how you do it. And I've preached this for forever. My way isn't the only way. My way isn't the right way. My way is just a really good way. But we can do the same thing for a multitude of reasons, and most of the reasons are incorporating very similar ideas. So you could fib this, or you could Elliott wave this, and guess what? Elliott wave uses Fibonacci. And what is Fibonacci? Fibonacci is basing things off price action. So I don't really care. Use price action, Fibonacci, and Elliott wave. I think all three are redundant, but you know, when you're flying an airplane, it's good to have redundant systems. Pneumatic, hydraulic, and muscle power. Okay? So my thought is there's only two things that should be done here. Bears sell a top. And they did, or whatever, and done. If you're a bear and you didn't do that, for some reason you want to stay in cash, or you missed it because you're not doing your job. You can't always be there, but you missed it, whatever. The second part is the bullish idea. So you prefer a higher high, but nonetheless, you're going to try down here because as I showed you, that there's support there. There is support. I showed you. I drew these lines. In fact, I removed some lines. But there's multiple reasons why that's support. Now you might say, Wayne, that's a 3A2. Good. 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 Did you buy it? Wayne, it's this. Wayne, it's that. Hey man, it's this other thing. Hey, it's a psych level. Hey, it's a corrective wave or whatever wave you want it to be. It's this, it's that, the other thing. Cool. Okay. So there are bears here. Okay. Okay. There are bulls down here and there are bulls here. What are you doing? Something in the middle? Bulls aren't there. Bears aren't there. Theta says nothing will work for you if the market is not moving in your direction. 100% concur. I concur. So that again begs the question, what direction is your direction? Okay. And again, most people don't answer that question. Yeah. Isn't it interesting too that we hit the top of the market the like 1 minute into the New York trading session? Wait. Oh, that's interesting. That's interesting. I never thought about that. On the 1 hour, that's the open. On the 5 minute, it was actually after because it took 10 minutes to get down there. That's interesting. Of course, that makes sense. I just never thought about it. Okay. So let's clear this now. No, actually, you know what? I'll leave it. Matt, you have to figure out what the dollar's going to do before you do anything. So how many pairs? You only need one. Maybe a dollar index. And from there, you go after pairing. Okay? So I don't know. When I think of pairing, I think of relationships, right? So I don't know if this is a good analogy, but your first decision, for most people anyways, you have to decide whether you want to pair with a man or a woman. Now the new kids are pretty flexible on this, but let's just say the old school, you would have to decide, do I want to pair with a man or do I want to pair with a woman? And then once you've made that decision, then you start to look for particular characteristics of who you'd like to pair up with. Okay. So going with like dollar, for example, you would say, okay, let's put that on the 1 hour. You decide, do you think this is going up or going down? And you're like, I don't know how to make that decision. Then you can't trade. Oh, hey, Hope. Thank you for that. Okay. So you make a decision here. Why the US dollar? Read my book. I answer that. I put a whole chapter. It's a whole chapter. Does anyone remember the name of the chapter where I talk about exactly this topic? The name of the chapter. 1 hour, 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 1 hour. Okay, that's good. Yep. Lucas nailed it. So one thing I tried to do a lot is the chapters and the sub-chapters have memorable names. So when I say, Oh, do you remember the 3-second rule? You know. Or the analogies. Does anyone remember how I described the Forex market reversing? No, the Greenback Guru is the name of the chapter. Can somebody describe how the Forex market reverses? Like an old man easing into a hot bath. It's beautiful, if I might say. Maybe not the image, but it's memorable. Okay, so there's a lot of neuro-linguistic programming in that book. And so that's called an anchor. Okay, I wrote words on a paper. Imagine this. This is the human mind. I wrote words on a paper, and you can remember it 15 years later because I printed an image in your brain. I never showed you an image, but you have an image, and you remember it 15 years later. How remarkable is that, huh? If you really think about it, that's actually very remarkable. I think the human mind is just absolutely fascinating. A great book. Well, I appreciate that. Being the author, I can tell you it's an honest book, and that's interesting. Maybe unique. I don't know. All right, so let's go to commodities. Let's do Bitcoin, gold, and oil. Okay, there's the trap, there's the break, there's the retest. You're welcome. You're welcome. Okay, higher high, higher low, higher high. Okay, and now what? Now we're back here. So as you get there, bulls might get a little nervous. Bears might want to get in. Okay, I'm not saying down. I'm saying a bear is going to think about down. So it's likely someone's going to try. Now bulls, real bulls here, are thinking that price. So now you have to plan this out for oil. Is it going to go up? And if so, how? Okay, well, you can start by marking some lines. You can say this zone seems to be important. Okay, and then of course this bottom zone, let's mark it that way so they're more of a zone than a price. Okay, so what would a bull do? It's easy. Okay, they're going to buy there, take it up, and off we go. Oh, they're going to try this. There's no complexity there. Okay. None. Well, Wayne, which one is it going to do? That's your decision. Okay? I'm not here to give you your alpha. I'm here to describe what's happening in the beta and for you to use technical analysis to confirm or deny your decisions. Okay? So I can tell you that's important information. and somebody is thinking up. Okay? So what do you think? Well, once you've made a decision, again, mark your lines. Okay? Again, I'm trying to share with you positive trading habits. Okay? I want you to be habitual. Okay? You're a habitual trader. Okay? What does that remind you of? Fibonacci. Whoa, whoa, whoa. You don't use Fibonacci in a range. Okay? But anyways, I got you. Now you drop into the game here. And what are you thinking as you approach this? Maybe up. Now, I also want to highlight one other thing that's important to humans. Patterns and numbers. That's 120, right? 125.00 my. Someone could take that as their support. Remember, that's all you're trying to think of is where's the buy? Where are the orders? Okay. Trying to get this a little more level. This one's a little off too. Not too bad though. Okay. Morning, JR Cigars. Oh, speaking about cigars, you might not like them, but they're part of my life. I got included in a rare cigar club, and they're going to start sending me the rarest cigars in the world. Nice! I think of my first order. My first box is on the way. Extra aged, extra rare. Can't buy in any store or any website type cigars. Cool. Can't wait to see. It was one of these things you had to put your name on a list. It was cool though. I had Joe Biden give him a call and beg for me. Sorry. 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 Bad joke, I know. Sorry. Look at that. We're up almost $50. Okay, where are they going to be challenged? Okay, connect the lines, connect the lines. If there are bears, okay. Oh yeah, let's do this. Indicator custom. Price action pivot points. Let's do 5. Okay. Roger liked that one. Nobody else though. That's fine. It was a little jab, I understand. Bust that out a little more. Oh no. Okay. Okay, pay attention. Okay, these are fighting lines, man. Hi, this is Joe, and I just gave you a call because I wanted to ask you if you could sell me some oil. Sorry. I know people are going to get mad. People are going to get mad and thumbs down me. I'm sorry. Do 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 do. Tesla. You know what I bought? I bought a charge point on Thursday, and on Monday it was up 11% at one point. In a falling market. I'm like, what? Oh, yeah. Oh, is that right? All right. Matrix is one giant game between the elites to control over the people. Well, I can't even control my kids, so. As far as I can see, the elites do not have control over anything. So look at that, guys. Oil used to be so slow. We just went up 50 cents and down 50 cents in a matter of a 15-minute candle. Well, very few of us here have been in active combat, so some have, but very few. Well, it's not basis points. It's not bips. It's pennies. So 40 cents up, 40 cents down. Okay, back at 125. Of course, guys, you can look at this and just say it's too fast. You back it out to the fiver, and maybe there's a little more clarity. See, in the 5-minute, the price action pivot points are still pointing down. Thank you, Hope. Is that not not what other people are doing? I don't really. The institutional investors that I've been talking with recently have been in different games going into the war, and they're bigger investors, so they're stuck in bigger projects over longer time frames, which means the war of 14 days ago was not in what they were doing. And so they're not reacting to the war in the sense of like they're buying and selling new opportunities. They're this risk has popped in and they're dealing with the risk, the change in volatility, the change in price. And, it's just different, right? It's just not like, they're not trading a 5-minute chart. But now in many cases, they are in a world of hurt and they're dealing with that and trying to hedge that out and remove risk if possible and kind of get through it alive. One of the benefits of being a smaller trader is that you're usually in a purely liquid portfolio, where even Forex traders on a bigger scale, they trade somewhat illiquid versions of what we do. Sure, Hope. But also, by the time, right, Hope says it's hard to divest, but by the time you decide as a committee, now you got to get the committee together and everything, you're like, we should divest. And then they're like, yeah, but it's already fallen by 78%, so what's the point? Okay, so you're like, that's the difference between, mark to market, for example. Okay, so like when you think of the 2008 financial crisis, many investors were holding a portfolio of mortgages and mortgage-backed securities. Okay? And most of the portfolio was still being paid. So they owned a portfolio of mortgages, and most people continued to pay their mortgage. The problem is housing prices fell. Let's say housing fell by 50%. So here's the issue. Okay? This gives you the idea of what's mark to market. Okay, you own. Let's say you own a personal portfolio. You own 5 houses and you rent them out. Lots of people do this. Friends of mine bought 8 houses or something. I forget how many they have now. Okay, so you have a portfolio of 5 houses. How much are they worth? Well, there's 2 ways of looking at that. Let's say monthly cash flow. So you say, well, after all my costs and stuff, I make $500 a month per house, so they're worth $2,500 per month to me, right? Okay, so that's based on the market. What's that worth to you? $2,500 a month. However, the houses dropped by 50%, so, okay, if they were $100,000, let's say they were $200,000 each, so they were worth $1 million, but now they're worth $500,000. The thing is, you haven't sold them. If you sold them right now, you'd get $500,000. So someone might say they're worth $500,000, but they're not, because you haven't sold them. You paid $1 million, but who cares? Doesn't matter what the price you paid. So after you collect your rent and pay your insurance and pay the gardeners to mow and blow, okay, put some money aside for annual maintenance, like maybe, every 15 years you replace the roof, that kind of stuff, or and potential damage, right? Maybe you save some for marketing when you have to replace your renters. But nonetheless, so what is it worth? Did the value of the house drop by $500,000? Or is it still worth $2,500 to you? See, what I'm trying to say, in one case, the value of the homes did not drop at all. In fact, what happens is when the housing market falls by 50%, a lot of people lose their house because they can't pay the mortgage, and so then now they have to rent a house. And in fact, very often what happens is rents go up a little bit, and now the homeowner, the person that owns the 5 homes now makes $1,000 more a month. But then someone else will come in and say, how's the bloodbath? You're getting killed in the market because your house has lost $500,000 in value. And you're like, bitch, I make an extra $1,000 a month than I did last year because the value of my home fell by 50%. No one else could afford to stay in their home. You could, you win, and now boom. And of course, 10 years later, these houses go from 500,000 back to $1 million to 1.5 million. So you make $12,000 more a year for 10 years, $120,000. Plus, now you're up 500,000 from your original mortgage, plus amortization. So your mortgage is lower, so 650. So you're probably up $750,000. Okay. Now, in some markets, what happens is the value of your home dropped by 50% and you're out. In this case, you could say, well, I only lose $500,000 if I sell. You see the difference between mark to market, not mark to market? Okay. Okay. So, right, a $10,000 investment in Forex means it's worth $10,000. And if it goes up to 11, it's $11,000. And if it drops to 9, it's $9,000. We're always mark to market. We're liquid. We are the market. If your Tesla shares, so you're like Hope, okay, and Hope tells you to buy Tesla at $800 a share because it's going to go to $3,000, but then it drops to $500, how much money have you lost? Well, the thing is, you bought 10 shares, you still have 10 shares. Whether it's $800 or not, or $500, you own 10 shares. You only make or lose money when you sell it. In Forex, if I buy WTI and it goes up, the profit's already in my account in real time. You see? Where Tesla, if it drops $300 a share, okay, you own it and you've lost money on paper, but nobody's coming to you and say you owe us $3,000 because Tesla's down. Well, actually, yeah, Tesla dropped by $300, so you owe us $3,000, right? No, nobody says that. You're just going to hold it. And if it drops to 300, all it says is you're never going to sell your Tesla shares again, most likely. That's what most people will do. Now, of course, a trader might get out of that and then try to get back in. Okay. But real estate is interesting. As long as you can pay your mortgage, you never sell. You understand that? So the only reason you care about, and so looking at real estate now, let's say you own an apartment building, because I'm not thinking your house and stuff, apartment building. So you own 150 doors. Okay, great. When do you care about the market value of your property? Anybody? Besides the day you buy it. But even then, that's probably you don't even care that much anymore. Price is really not that important based on other things. Now, you can have a price that just never makes sense, but whatever. So when do you actually care about the market value of your property once you've paid for it? Yeah, we'll do that, Alexander. I'm trying to get this idea of mark to market and liquidity and stuff. Because when you buy 150 doors, you just care that you're going to collect X number of dollars right, per door. And that your mortgage payment is X number of dollars, right? NOI, net operating income. So you just care about your rent minus expenses. Okay? And part of that expenses is your carry, your interest cost paying your loan. Because it's actually expenses and then financing cost, which is not net operating. You know, you have to do your NOI, then you have to do your financing costs. But similar, right? The money in, money out, and that there's profit left over. Okay, Johnny says when you sell, you never sell. The second thing is refi. Yes, so every 5 years, you got to roll over. And now if your property is worth less, you're in trouble. If your property is worth more and you have positive cash flow, okay, plus you have value, okay, and then you have amortization, okay, you should be able to get an LTV of, 80%, which means if all of this other stuff, you have positive cash flow plus your rents are going up because you're improving the property and you picked a market in which people are moving to, so there are more renters and you can every time someone moves out, you raise the rent $100 a month or something, right? So you have positive cash flow, the neighborhood's going up in value, so you have an increase in value. Meanwhile, the renters are paying your mortgage down for you, so you have amortization, and you collect an LTV, which means, let's say you have to roll over a $10 million property. You have to refi a $10 million property, but because of rents going up, your cash flow is increasing. Therefore, based on cash flow valuations, the value is higher. Plus, based on market value, the value is higher. Plus, on amortization, you owe less. So let's say for 5 years, the renters, because remember, the renters are paying the mortgage, drop your mortgage down to, I'll just make up a number, $9 million. Okay? So you owe 9, but the value is now 12. Okay? You roll it over, you get an LTV of 80. So now your mortgage goes to 10.5 M. And because you're such a good investor and manager, you put 1.5 M in your pocket. And who paid for it? The renters. So you beef your mortgage back up. Now you take 1.5 out. Now you should have a decent rule, right? You should reinvest. So I would put 1 million in my pocket, 1 M me, and then reserve 5 M for reinvesting into your property. So you might have to replace the windows, or you might have to rebuild the parking area. There might be a fire. Okay. I know someone that owns an apartment building. Someone lost control of the car, smashed it into the building, and then the car caught fire and the building caught fire. Now, it didn't burn down, but it caused a lot of damage. There was burn marks on the outside of the building, but then it broke some pipes and then it flooded the basement. And you're like, what the hell is this? Well, welcome to real estate. Okay. So now you got insurance companies, and the apartment building, I think, was in Boston or something. So and he doesn't live in Boston. So now you're flying up there. You're dealing with the contractors and hiring people. You're dealing with pissed off renters. You're filing insurance reports, and they're delaying the fees. And dude, welcome to the world. So you keep 5M over there. Now, this impacts Forex. Do you know why? When I talk to real estate people and developers, I know they got this 5M sitting around. And so I was in Florida a year ago. Do you guys remember when I did 2 or 3 webinars or live streams right from the cigar bar? beautiful cigar bar in Amelia Island, Florida. I go there all the time when it's right across the street from the Ritz-Carlton in a beautiful part, right where they do the Concours d'Elegance. So anyways, this guy, he doesn't even live there. He owns the cigar bar and 2 golf courses. And so I'm hanging out with him. We're smoking cigars. I'm like, so what do you do? And he's a real estate developer. That's why he owns golf courses. Okay. 6 hours away from where he lives, right? And I'm like, oh, you got to be cash heavy. And he's like, yeah. And I'm like, you must be getting crushed where you got all this cash and there's nowhere to put it. You know, you're already illiquid in a whole bunch of markets. And now you got this cash, but you know, you got this risk, you got that other risk. So you just leave it in your account, but you're not getting paid. I mean, it must be driving you nuts. And he's like, oh man. And all of a sudden he knew I knew. And then he asked, well, what is it that you do? You come in here, you got 3 screens on a laptop. You're here at 7 o'clock in the morning. So I actually paid them some money so I basically rented the cigar bar for myself so I could do my live stream with you guys. And he's like, what do you do? Like, dude, what, like you're here at 7 o'clock in the morning in my cigar bar. Like, and I'm like, well, I have all the same concerns you have, except I'm 100% liquid all the time. And he's like, what? And I'm like, yeah, you know, we're going for 1 or 2% a month, depending on market conditions. And he's like, what? All of a sudden, you know what he's thinking. Every real estate developer's thinking, well, I could put this to work. I'm just sitting on it, waiting for the next deal. So remember, the other way you can use this is the next time you find an apartment building come up, you got 5M for the down payment and you mortgage that sucker. Now you go from cash to a new illiquid market. But meanwhile, while you're waiting for the next deal, because there might only be 1 deal a year or every other year. So this 5M just sits around, guys. You got to think about it. These developers and these real estate guys, they're sitting there. They got a big pile of cash waiting for the next deal. It could be a month. It could be 18 months. So they need to be able to say, dude, I need my 5M back tonight. And you're like, no problem, man. I'll cash you out of the position and I'll wire it to you. They're like, cool, man. Awesome. Because they need the new apartment building. But meanwhile, you sit on it and you get to trade it with the benefit of some sort of return better than a bank account, but maintaining the cash completely liquid. So all of a sudden, I'm telling you, every time you bump into a real estate guy, they're your best friend. You guys can work together. You're like, well, what if I can get you 10% return a year on that? 10%. Swifting it, sending it from your trading account back to their bank account. Transfer. You transfer it to you. Okay. So guys, like if you're running a small Forex fund, you need to hang out in places where real estate developers hang out. So if you really wanted to be strategic about it, you go to your city, you do some research. Who are the biggest real estate developers? And then do some, where do these guys live? And then where are the awesome places near their office? And where's the awesome places near their house? Golf clubs, join a golf club. Join a shooting club or a hunting club. Buy an airplane and join a pilot's club. Okay? Country club. Get box seats at a sporting event, whatever. And find out where these guys hang out with and hang out with them. And I'm telling you, every single person that I meet that's got money, they find out I'm a Forex trader and they're absolutely intrigued. They want to talk all day and all night. And they're going to ask you about Tesla. And I'm like, well, my buddy Hope has a lot of conviction on Tesla. But let's talk South African Rand. Hope, yeah, you want Tesla? Let me show you peso. Okay? So anyways, I hope you enjoy that conversation. Meanwhile, we're bouncing around between support and resistance, support and resistance. Okay? Okay? We have this as, right, psych level, this as a role reversal area. Meanwhile, there's our printed top. So again, I told you, it's easy if you've made decisions in advance. If you're a bull, you're a buyer here. If you're a bear, you're looking to sell probably now. How do you make that decision? Yeah. How do you make that decision? Okay. So Richard, you got a lot of money? Cool, we should hang out. Yeah, hey man. Yeah. What city you in? Hey, I know a classy joint not far from you, man. Yeah, we should get together. You tell me how much money you got, and I'll tell you how much money we can make. Meanwhile, we'll smoke a cigar and have a cocktail. Guys, that's how you run a Forex fund. That's what you do. Yeah. Oh, yeah. Okay, do Bitcoin. All right, it's up to you guys. There you go. Risk on or risk off. By the way, if you were 50% of you answered the survey at the beginning of the webinar that you were risk on, so you think this is going to break higher. Great. Okay, you're thinking 125 to 150. Cool. Get her done. Okay, as George Bush Sr. would say. Okay, gold. Okay, there's your daily. And there's your fiver. It's exactly the same thing we just did. Okay. By the way, I've taught you to trade gold at 7 o'clock in the morning. How many people confirm that? That I've taught you how to trade gold at 7 o'clock in the morning for the New York session, to front run the New York session. Okay. I've done many videos on it. Okay. That kind of puts you sort of in this area here structurally to set that up. Okay, all you had to do was be a bull. So for you risk on guys, you got it. Now you risk off guys, I don't know, you might have, I don't know what's left of here just based on that. I don't want to look at that. But somebody did something here, right? And then it popped up and you're out and you took a small loss, whatever. It's over, great, fine. Okay, but for the other side of the team, they were buying low and they got that right. And by the way, by 10 o'clock in the morning, by 10 a.m., you're done for the day. Okay? And what I've told you is you might not make all the money, but you'll probably get 70% or more of the move. But just in the first couple hours. Right? I'm not saying trade at 5 p.m. when Asia opens, and then all the way to 5 p.m. when the United States closes. That's not what I said. I said from 7 a.m. to actually 9:45, but let's make it 10. Okay? You can trade gold for 3 hours a day and get at least 70% of the move. There's a lot of value. If you join FX Bootcamp, this is a sales pitch. If you join FX Bootcamp, we spend a significant amount of time training you on the times to be trading. Mediocre results occur in mediocre market conditions. We spend a lot of time talking about the precise moment in which you should be at your chart setting up your trades. So some people might be walking in here, they'll get that, and then it'll come back down, and they'll get 0% of the day. Where these guys bought, and they bought, and then they're out, and then they're done, and what happens next, nobody cares. You either hold it, and the only way you get knocked out is you have 100% reversal of the market open, or it continues higher, or you just buy it and exit. What if? Okay? Depends on your fundamental bias. Okay? So it's like one of these things. Here's the Asia top. There's your rolled reversal, and that was your gold trade. Okay, there's this other top here. There's sort of a zone. Now you're now you're going to say, Wayne, that is hindsight trading. Well, you got to think about how I teach. You've already made a decision yesterday, the day before that. You're a bull or a bear. That's that. That's it. So I'm not telling you you should have done that, or I'm not telling you I did that. All of that's irrelevant. What do you know and what do you intend to do? So if you're a bull, that's that. If you spot a higher high, you must find a higher low. How do I teach that? With this technique. I'm just reinforcing the technique. I'm also reinforcing that some people just start trading now that it's occurred. A little late in most cases. So the thing is, let's redo it. Let's now forward think. Higher high. What do we do next? What do we look for next? Richard says he has to think more like a trader and presumably less like an investor. I disagree with that. I mean, somewhat yes, but also I think traders need to think more like an investor. When you buy an apartment building, it's not because you think the value will go up tomorrow. You have to think out, what is this market like? What's the neighborhood going to be like in 25 years? Are there going to be jobs in this city? Are people going to move to this neighborhood? How far are we from a Starbucks? How far are we from a cool bar? How far is the commute to work? Okay? You're asking much bigger questions. Then you are like, oh, okay, now what? Now what's the cost of financing? Who's going to finance this deal? Can I build a syndicate out of this? And then what? Now you got good financing. Okay? Banks are your financing partner. So you got 1 or 2 banks, maybe 3, 4 banks lined up to finance the deal. Cool. Now you think about price. Price is almost irrelevant. What is your structure and your financing? It was way more important than the price you pay. Think about it. Are you going to buy an apartment building that's going to lose value over the next 25 years? No, then who cares? Cash flow minus expenses. Now you have, right? You have your net operating income. How much do you have? That will tell you how much you can afford. So now you go to your bankers and you're like, what are you going to charge me? You want in on this deal? Do you want in on this deal? Do you want in on this deal? Yeah. Good. Mine, right? So they give you some ideas of the cost, your financing cost. And you're like, oh, I can afford $6 million instead of $5 million. So it doesn't matter whether it's 5 or 6. Okay. So what's next? High or low? Where? I don't know. Why don't you tell me? So one person says, I'm going to use Fibonacci. So one person says 382, 50%, 618. Cool. That's what a Fibonacci guy is going to say. Now, let's say you don't use Fibonacci. Can you find similar reasons to buy? Yeah, for sure. Yeah. Right? Cool. So there's your zone. Okay. What if a higher low doesn't show up? You don't buy it. Okay. You buy up there, fool. That's fool's gold. Okay. Yeah, I think if you buy it up there, you lack so much discipline and you have so little preparation. I would say there's 100% chance you will not have a career in this business. You might have a bankruptcy, but not a career. Because if you can't, if you're a bull and you can't buy this and you can't buy this, but you buy this, it's just sickening to me. I'm not saying that's you, of course, but I'm making a point. Now you get in the game, your trading ability, your patience, your discipline, and work ethic will lead to bankruptcy. It's just so grossly negligent, it makes me sick. Sorry. But it does. It makes me sick. I get emotionally and physically upset. So the answer is, if it doesn't make a higher low, do nothing. Why would you do that? Why would you buy something overpriced? I like it a lot. Okay. Now you're like, but Wayne, you just told me price doesn't matter for real estate. Well, the price of the financing does. Okay. Again, when we're talking about real estate, there are 3 buyers. Buyer 1, 2, and 3. Okay. This guy's going to make a bid of $5 million. This person's going to make a bid of $4.9 million. This person's going to make a bid of $5.25 million. Okay. Who's going to get the deal? Hammered Gaming, only 50% of respondents were bullish. The others were bearish. But who gets the deal? Richard probably knows this answer. Anybody else want to take a shot? Who's going to get the deal? These are offers for a piece of property. You think someone is going to sell their apartment building to buyer number one for $250,000 less? I'd say that's highly doubtful. The one who pays the most. All right, so the answer is 3. Now, is 3 a dumb investor? Are they paying too much money? Is that stupid? Investor number 1 goes to the banks. They look at the assets that this person owns, the experience, and basically build a risk profile around the lead borrower. And they said, based on our analysis, we will lend you the money you need for 5%. Based on the amount of money they get from the bank and how much they have in cash, they can only afford a $5 million bid. Investor number 2 goes to the banks, and investor 2 has more property already on a portfolio. So if this investment goes bad, they can go against the borrower's other assets. And because of that, the same property with the same cash flow has a lower percentage on the mortgage, which means, right, there's more leftover cash flow. Oh, wait, sorry, I got this one backwards. This would be 5.1. Okay, less creditworthy, and they can make a smaller bid. Sorry about that. That was confusing. I just thought I went bigger, bigger, bigger. So instead, it's the opposite. This person has a small portfolio of other assets. This person has no portfolio. So this would be 5.2. And based on that, because of the higher rate, there's less money at the end of the month, and they can only afford a smaller amount mortgage, so they can only offer on the deal 4.9. Okay, investor number 3 is the best investor, has the most amount of assets that they own, has the most experience, knows and already has established relationships with bankers, so the due diligence is super easy. And therefore, the financing syndicate for investor number 3 says, oh, yeah, you're a good customer. We've known you for years. You got a ton of assets. Every deal you touch turns to gold. We'll loan you the money, and the cost will be 4.25. And therefore, the buyer goes in and makes a bid for 5.25 because they have more money left over to get this property paid for. They have more money available. So it's not that they're making a dumb decision. They're getting cheaper money. They have better investors. And in fact, maybe they don't even go to a bank. Okay, they go to Richard Spencer and they say, we need to borrow like, $5 million from you. And he's like, well, I got 5 M sitting around. He's like, so here's what I want to do. I want to give you the 5 M. And in 5 years, when you refi, I want you to give me 6M back. And then they're like, based on all of that, especially with basically less money up front and all that kind of stuff, they can afford to go in and put in a bigger bid and make sure they get this property because they're going to have the cash flow. And because it's such a good property, it will go up in value and the renters are going to amortize it. So who cares about the price? The thing is, you care about your financing syndicate, your cost of, right? Is much more better. So the bigger guy gets the bigger deal, not because they have more money, but they have cheaper money. A bank is a great partner, by the way, because they don't take equity. Like Richard might say, all right, I'll lend you the money. When you refi, I want an extra $1 million, but I also want some upside. Give me some ownership on that, right? Plus 3% a year of your positive cash flow. You can get whatever you want. Okay. Okay. So it has nothing to do with money. It has everything to do with cash flow. Same thing with us. Cash flow is money crossing borders, and that's what we like to look at. Okay. All right. So I guess I should leave that one there. Let's do this. Should I mark this one? It looks similar to that one, looks similar to that one. So let's throw down something like that. Okay. Would you agree that those are resistance levels? Of course you do. All right. Next one, let's connect that with that. Okay. This one's already marked. Let's just move this up to this area. Oops. Okay, and we'll move this out. Cool. So that's where we start the day or the week or whatever. Let's drop into hourly. Okay. So you can mark maybe there's some shorter term stuff here, up on high. There's some shorter term stuff here, down on low. But the highest high and the lowest low are our range. We are not trending. Drop into a 5-minute chart. How do you want to play this, son? Buy low, sell high. Well, even inside of this now, you can see we got a lot, right? And you can do a bunch of connections here. I'm not saying all of these independently are important. I'm saying as a zone, they're important. So you can use your visual representation any way you want, as long as you notice what's going on. Okay. Now, if you're a bull, you're at the top. If you're a bear, you're at the top. Does this matter? Oh, faux show. Oh, man, it's 10 o'clock. I've gone too long. I'm sorry, man. And Andrew bet correct. Andrew said, I bet number 3 had a cheaper mortgage. That's what it's all about. Credit. And how do you get good credit? Low risk. How do you get low risk? You have a lot of money, you have lots of positive cash flow, and you own a lot of assets. So if you do a deal with the investor / banker, okay, if the deal goes bad, they can get out of the deal by going after your other assets or your other cash. Okay, this is money. By the way, there's so many ideas that I have for doing an in-person conference. I think I got a real good idea where I teach you guys how to raise money, and this is where you're actually on stage giving presentations about your Forex fund. Right? Which is great. And I think we should do that. I have this other idea, and it's sort of like focused on the human aspect of wealth. Some of it might be a little silly, but interesting, like looking at like bespoke shoes, custom made suits, how to judge fine wines, how to judge fine cigars, having a class on caviar. I thought that would just be fun in of itself. Maybe for 2 days, have experts come in and we're all sitting around tasting the various types of caviar. So next time you're hanging out with a multimillionaire, you're like, oh, that, if you like that caviar, oh my God, you should try this other stuff. It's totally my favorite. Like, that's good. And I like this and this and this about your type of caviar. But, oh, if you ever have the opportunity to try this other caviar, I'm telling you, you're gonna love it. Meanwhile, you're sleeping in the back of your Volkswagen and parked at the Walmart. But you're like, I need to close this deal with this millionaire, right? So you're out there teaching your millionaire about fine caviar. I don't know, but I thought it'd be great, right? I have a friend of mine that makes actually quite a bit of money now. He runs his own business. He went through some tough times in the very beginning, but now he's doing really good. But he joined this leadership group of other CEOs, and he pays something like $5,000 a month to be in this club, right? And they're all CEOs, and they do some really interesting things, actually. And I love it. It's a great idea. But he flew down to Florida to hang out with this group. Right? He paid, I think, 25 grand to spend, a week in the Florida Keys with this group. And there were some really interesting things that they were doing. But one of the things that they were doing is at the dinner, they were serving, $300 bottles of wine for the CEO group. And he basically prepaid for all of this with his entrance fee, right? And you know what he did? He ordered Bud Light. And I was a little mad at him. I'm like, dude, I get it. Wine's not your thing. I get it. And you'd rather have a Bud Light. I get that too. But you should try it. You should check it out and ask questions. Like, why is this one? You're like, I don't really like wine, and this tastes like a $9 bottle of wine to me. Like, why are we paying $300 a bottle for this? And then some guy tells you. And you listen and you pay attention, you're like, oh, well, that's really interesting. Okay, so this is rare for this reason, and it has this characteristic, not that characteristic. And at least learn, right? But he just ordered his Bud Light. And I'm like, oh, come on, dude. And he's from Manchester, so he's like, whoa. I mean, try it. Just try it. Come on. Stretch. Okay? Dan says, okay, my husband has an airplane now and has joined a shooting club in the past year or two. So the reason I bring up that is those types of people, there's a lot of camaraderie, racing cars. So like when I was in Connecticut racing vintage Lotuses at the Rolex Vintage Series. Sounds arrogant, right? Of course it's arrogant. Jeez. Of course it is. Okay? Cool. Racing. I wasn't watching. I was racing. No, I didn't race. I was with my uncle. It was his cars and stuff. I met the executive vice president of BMW United States. Okay? I met a senior investor at Bear Stearns who just got a $40 million bonus. And I met probably 2 or 3 billionaires. Sitting in the paddock at night because I brought wine. And people are walking around like, wait, what? Dude, you got wine? Sit down. We had a little fire pit going and stuff. We had all kinds of lawn chairs. And all of a sudden, sitting in the $20 Walmart chair next to me, drinking my $20 wine, is a guy worth $2.3 billion. He brought $40 million worth of cars with him. And he's got, I'm like, but think of the size of this, right? 2 or 3 18-wheeler trucks full of cars, right? And supplies and parts and tools, and 2 mechanics, the driver, a lead person, the guy in charge of the cars, right? Full-time jobs, and he just flies in by helicopter, and he gets in his Le Mans car worth $4.8 million, and he drives it around for an hour. And then he gets in the other car in a different class, and he drives that around for a while, and having the time of his life. Meanwhile, at night, he's sitting there with me, drinking wine. That's why you join a club like that. Or you get into a community like that. Pilots are like that. Race car drivers are like that. You pilots are like that. Shooting clubs and hunting clubs and all that kind of stuff. But we were talking about this many years ago. Like, if you plan on raising money one day, you gotta be in the right crowd. So the example I gave you, let's say you don't have a lot of money, but one day you believe you want to have friendships with people that have a lot of money, because they might look at you and say, oh my God, you're a profitable Forex trader? You're like, yeah. They're like, that's so fascinating. Investor, right? So how do you develop that when you don't have a lot of money, you don't have the track record? What do? How do you start developing your Rolodex of contacts? My suggestion was you find the Ferrari club of your city. So I would call up the Ferrari Club of Atlanta. Okay? And I'd go find out the next event, go to the event, start meeting people, but I would specifically look at who are the leaders. The leaders of the club are doing this and they're busy. Okay? They're busy. You had to organize an event. Phone calls had to be made, marketing emails had to be sent out, membership dues have to be collected, people need to be renewed, all this kind of stuff. So you walk up and you're like, and you don't even own a Ferrari. And you're like, man, this event that you're doing, so let's say you're talking to the president, this event you're doing is awesome. And the way that, you communicated it was great. I got here, it's professionally put together. I love what you're doing, but I also can see that you need some help. Is there a way that I can volunteer and be a part of your organization, your team? Can I help? How can I help? You're in. You're in. And then I suggest you should be on the new member committee. So you're the one that once somebody joins, you call them up, you ask them some questions. Do you have a Ferrari? What kind of Ferrari do you have? What kind of Ferraris are you interested in? And then, oh, okay, good. Well, when you come to our event, let's have an opportunity to meet in person. Now, 3 years later, every single member will know you. And then you're at an event and they're like, oh, hey, by the way, what is it that you do, JR? Oh, well, I'm a Forex trader. Really? That's so interesting. And like everybody in your city that owns and collects Ferraris, you're going to have an opportunity to have your first investors. Okay? You see? So you can work on that now. You don't want to just show up and you're like, hey, I'm looking for some rich people that might invest in me. No, you need to develop relationships ahead of the time. And of course, my next recommendation is when they say, really, wow, is that something that I can invest in? You can say, wow, I really appreciate that. Let me keep that in mind. But right now, I'm not accepting new investors. And there's a reason you say no. And that's like next level. But next time I'm accepting capital, I'll keep you in mind. But you got to give me that free ride in that Ferrari, man. Okay? You got that, you got to let me drive that LaFerrari around the track at least once before we even talk about you investing with me. Is that a deal? Get what you can, man. Get what you can. LaFerrari, man. Beautiful car. All right, cool. So check it out as I'm talking. We're holding up on support. Apparently, bears don't sell at support. Cool. So thank you for being in my life. Thank you for being part of this community. Thank you for hanging with me today. If you could, please click the thumbs up button and maybe leave a comment under the recording. You'll be able to do that in about 30 seconds of me ending. Again, all the resources available are linked in the description below. You might want to join FX Bootcamp for $88 a month. Sorry, $88 a year. You're like, wait, no, $88 a month, right? No, $88 a year. I'm doing whatever it takes to get you involved. So please join the community. I don't think you'll regret it. And if you're in my day trading group, I will see you tonight in Asia for the Asia Open. And then you can trade with Ryan at the London Open. What an epic day that is, huh? And then, of course, I'm here every day for the New York Open. So my day trading group gets leadership through all three Opens. It's a beautiful thing. It's spring every day. So, peace on earth. May the pips be with you. May our profits be above average. Cheers.